The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, I went to the doctor yesterday to get all my work done, and he told me, he said, I've got good news and I've got bad news. And I said, well, give me the good news first. And he says, I think I better give you the bad news first. And I said, well, okay. He said, what's that? He said, you're going to die. He says, the good news is I don't know when, but I did got a clean bill of health. Everything was good. Blood pressure like a teenager. The mind like a octogenarian. Oh, that's a tough word, isn't it? Anyway, let's get on to these markets. You don't want to listen to my little cheeks go up and down. You can see here the FTSE had a nice rally. It looks like it's made up to a double top, possibly. And then if you look at the DAX, that's the one I'd like to focus on here for just a second, folks. You'll notice the DAX, we have all these cycles that are, this is done by one of our good friends over across the pond that trades the DAX all the time. And you can see there is a nice head and shoulders pattern there. The problem with that head and shoulders pattern is it doesn't really meet the definition of a head and shoulders pattern that's in the book for Andrew Lowe, the non-random walk down Wall Street. That first S there, that should be higher. That right S should be lower or equal to the other shoulder, and it's not. So there's some great harmony there, and you can see that in those cycle finders that are there. But those cycle finders, folks, those only work about 2 or 3 repetitions, and then they start to expand. So I don't view this as a head and shoulders pattern because of that left shoulder being so much lower. Now, the good part of this chart is you'll notice that the head came exactly at the 78% level. And then you made a beautiful ABCD on the downside. You can see that happened Sunday, and it had a big strong rally yesterday, like the rest of the world. And so that's the real key to that particular pattern, because if you're going to do those patterns, you've got to be able to find them helpful in several different ways. And remember, they don't work all the time, but two, they are predictable within limits, correct? And within that time frame, you're able to find a probability, and all you have to decide is, what your risk is going to be, and that's the whole key of this. It's all about risk control. Now, I want to share something. One of our TFNN listeners sent me one of the coolest charts I've seen all year, and it's basically it's a graph of the fast food chains in the world since 1971. Well, this was a dynamic. In other words, it started in 1971 with these companies, and it showed the shift in these. McDonald's was always near the top, as was KFC. But you could see the shift. And what happened, it was about 15 years ago that Subway took over. Now, remember, Subways are in little tiny malls. McDonald's is basically it's a real estate company because they own such, incredible real estate where those shops are. So there's a big difference there. But Subway's the number one. And number 2, of course, McDonald's, and then Starbucks, and then down the line. If you ever go to China, folks, you can see KFC and Pizza Hut all the time. I mean, they're everywhere. You don't see a McDonald's. Well, you see McDonald's, of course, but you don't see Taco Bell or Baskin Robbins. Unless you're in a big city like Beijing or Shanghai or Guangzhou, someplace like that, they'll have them. But most of the smaller cities, remember, they got 60 cities over there with more than 10 million people, so that's a big outfit. So that's one of the reasons why we're be able to look around. We'll go there. All righty. Well, I have a little human interest story. Okay, Ray Kroc was the owner, the founder of McDonald's, correct? Well, Ray Kroc was actually in the wedding party for my aunt, and they went to school together, and so this was long before he had McDonald's, folks. This was back in the 50s, but they did know him, so that's neither here nor there. Okay, let's get on. All right, I want to show you a failed pattern, folks. Very important one. This is the Nasdaq, and I'll give you and those of you that get the letter. The 24/7 letter, I was alerting you to the fact that we had a chance to be really strong on Monday, and I'll show you why. This was the Nasdaq pattern. We backed off. You see the low that we made back on last Wednesday. That was just a nice little retracement, very similar to the other one we had. This should have been bigger. Okay, and then you'll notice that the close. Now remember, this is as of today, so that big day that we had yesterday is not there. So it was just those little bottoms that were in there, and with those tail closes, in other words, closing in the high end of the range, especially on that Friday, set up a possibility that this market was going to go much, much higher on Monday. I had no idea why. I just said there's a possibility of that. And one of the key charts when I watch, because the NASDAQ is just basically 15 stocks or less, but the real key was if you looked at the E-mini S&P, and we'll do that through the eyes of the SPY cash, you'll notice that the low we made back last Thursday was a perfect ABCD at a 382 retracement. It came in at 0.44, and it closed very strong on that day on Thursday. And look what it did on Friday. It closed strong on Friday, too. This was sort of a tip-off that this thing really wanted to really wanted to go higher. We did. Now, we went up and we took out all those highs from April. Now, we haven't gone anywhere. Now, that may or may not mean something. The fact that we got up to that level and then backed off, why didn't it continue today? Probably because yesterday was one of the biggest days we've ever had on the upside. In fact, I heard yesterday on TFNN, someone said that the tick index was the highest it's ever been on the positive side since 1997. That's going back 23 years, boys and girls. That's a long time. So there was a lot of buying coming in, and I know it was related to this vaccine stock that's out there. That's what they tell us, but I don't think the Fed needed any help to get that market going up yesterday, because from the get-go in the morning, I mean, that market had been up 5 points early Sunday. By the time we got in, we were up about 30, and I believe, we just exploded and ended up being up 105 points or something like that. So it's going to be really interesting to see this unfold here as we go through. We got a caller from Philadelphia, Mr. Z. How you be?
I'm doing very well, and since you just had your full tune-up Monday at your local physician, we're all very glad to hear you back in the saddle.
Got the oil change. I'm ready to go. What's up, buddy?
Excellent. 2 weeks ago, I mentioned to you, Larry, that I would possibly be asking you regularly about some of the ag commodity futures now that we're into planting and soon growing season. So my call and question for you today, please, is do you see any pattern that suggests potential bottoming in July soy meal futures, and if so, what stop you'd have to run if you're bottom picking to exit thinking you'd be proven wrong?
Hey, we got to take a break here. We'll be right back. And we have Rich Anderson at the break today, Mr. Z, so we'll ask him. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. Larry Pesavento is hosting a special event Thursday, May 21st from 9 a.m. until 4 p.m. Eastern Time. Trade What You See, a live trading event. For the first time in over 10 years, Larry will host a live event where you'll watch over his shoulder as he trades the markets live. You'll see how he organizes his trading day, the times most likely to generate a signal, what outside information he ignores, and more importantly, what he does not ignore, and much more. Larry will trade the markets in real time, including the Euro US dollar, pound dollar, dollar yen, the Dow, and E-mini S&P, crude oil, gold, treasury bonds, wheat, and soybeans, and more. When you sign up, you get a month of his daily newsletter, Fibonacci 24/7 included. For all the details on Larry Pesavento's live trading event on Thursday, May 21st, and to sign up today, visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks. We're talking with John from Philadelphia. John, you had a question about the soybean meal. I posted the chart in there, and I believe we're at a pretty good bottom. The problem is, John, we are looking at, the fundamentals on this. I mean, I don't listen to that stuff, but my gosh, they're bombarding the folks about these fundamentals, which you'd like to see near a bottom. So I really do believe, because I've never personally gone through a season where we didn't get at least one crop scare, and the crops are in now, so there's going to be some wild and woolly days of weather and other stuff, but I'm looking for a buy here in the meal and also in the Christmas corn, the new crop corn, John. That's one that's very interesting. And let me just show the folks what's going on here in this corn market to give you an idea how much these farmers are hurting. Here is the chart for the new crop corn. Now, remember, folks, they get subsidies from the government, and we're trading it around 330 in the corn. We haven't been this low since Hector was a pup, and that dog's 23 years old now. So the thing is, if you look at these corn really closely here, since April 20th, John, we made a bottom, then we rallied about 20 cents, and we came back, and we had a little bit lower high, a little bit higher low. So we're making a triangle in here in the December corn, and that's what's got my attention. And the next chart will give you an idea of why. All I did now was to blow this up from the April 20th. And remember, I'm just looking at this from a technical standpoint here. You'll see we've made higher lows now. We made a higher low on the 30th of April. Then we made a higher low again on the 14th of May. And by golly, guess what? We had a little bit of a move. We've only moved about 3 or 4 cents, but at least it started. As long as we can stay above 330, and that's only 2 cents from where we are right now. And one of the reasons, John, is that this market's been beat up so bad, no one's even watching it. So what's your 2 cents worth?
Yeah, Larry, let me add to that. First off, thank you for posting that very chart. I was looking at the exact same thing. You've taught me very well, so we both see the trade in the same direction. Just to add to that point, I share with you this. The government's the CFTC, the Commodity Futures Trading Commission agency within the federal government, issues commitment of traders reports as of Tuesday's closed data. They released the reports Friday at 3:30 p.m. That report I track weekly and have done so for 15 years. That report tells us that speculators as a group are massively short corn. They've never been more short corn. In other words, speculators betting on a lower price, except for once in the past 15 years. And it's also been my experience whenever speculators are highly lopsided, in other words, very short at lows or very long at highs, the next move is in the opposite direction and no less than 20%. In this particular case, add 60 cents to 332, that gets you up to 390. That's a 20% move. That'd be my guess as to where corn gets to sometime between now and like August 1st on nothing other than these speculators who are massively short having to cover. And remember, that group, when they're massively short, when they start to cover, there's nobody to sell because they'd be typically natural sellers. So that'd be my guess, Larry, for those reasons, in addition to what you just said.
Well, I have to agree with all of that. I just go back to the probabilities of us going through a year without a major weather scare. And, John, one other thing, we're in some really serious economic times here, and God help us that we don't get a Dust Bowl type scenario like we had back in the 30s, but the crops are managed better, and I don't think anything like that is going to happen. The problem is with demand. And that's, we've got supply overwhelming demand right now, but, you got to trade the chart. So that's what I try to do. Trade what you see, not what you think. The more I think about this, the more trouble I get into. So that's what I try to look at anyway. John, what's your feeling on the cattle? The folks here should get ready for higher meat prices because the beef prices are going to get very, very high within the next few months, I believe, given the fact what's happened to these guys running their herds. What's your feeling?
Yeah, and in fact, what you just mentioned has already occurred. The problem, of course, with the packing plants being running 30% under capacity because of disease evidently afflicting some of the labor force in some of those plants, the number of animals being run through the packing plants, of course, is way off. And that has led to depressed prices for the live cattle futures that you and I would be trading. But with fewer animals running through those plants, there's less boxed beef coming out the back end of the plant, and wholesale and retail prices are very, very high and jumped 30, 45 days ago. So the price in the store already reflects that. Question is when and if the live cattle futures, the prices of the animals actually rallies decisively. That I don't know. They've bounced. I played that bounce. Where it goes to right from here, I sure wish you could tell me, because I'm looking for answers to that question.
I don't know the answer to that one either. I'm watching too, because we've had a heck of a rally and then a little bit of a, consolidation here. So there's so many things that you can trade other than cattle and hogs, John. As you know, I spend a lot of time in the foreign exchange and in the financial sections with gold and stuff like that. So you made a nice call in that silver, folks. Everybody at TFNN thanks you, because you were very, very bullish silver, and the market rewarded you quite a bit. So congratulations on that one. That was a beauty.
Thanks so much for your help on soy meal and corn, and thanks in advance for having that discussion with Rich at the bottom of the half hour.
Okay, we'll be talking to Rich Anderson, folks, when we come up for the break. Now, I've had a question about Bitcoin. As most of you folks know, I have never traded these cryptocurrencies or blockchain vehicles or anything like that. But what I am looking at is the patterns that form as it goes through, and that's the main thing that I think is that we really need to watch on, because it trades patterns just like everything else. And so I think if we do that, we'll be far better off. Let's take a quick look here. This is Bitcoin up to date here this morning, and if you'll notice here, you'll be able to see here that we had that big 3 drive to a bottom pattern that ended in March, on March 16th. That's when everything was going crazy. We were down at 3,800, and actually it was 3,800, and then we rallied all the way up to 10,000, and then we backed off for 5 days to 8,100. Folks, that was an exact 382 retracement of that move, and look, we've gained back. We're right near that 10,000 level. Once we clear 11,000, folks, this is going to be a very, very strong market, in my opinion. I'm just looking at the charts, but this is a very bullish chart potentially. We got to pay attention to this. 877-927-6648. Stay tuned for Rich Anderson.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We're talking with Rich Anderson, formerly of Anderson Capital Management, now gleefully retired there in Minnesota. Rich, how you doing, buddy?
I'm doing great. Beautiful day. Looking down at the lake.
Are you still quarantined?
Yeah, and just like the packing companies are anybody over 60 or they're giving them paid leave. I think certainly anybody over 60 or 65, until we have a vaccine or something, sheltering in place is the thing to do. Food is an interesting thing, and cattle and hogs, I think you have a steak or hamburger now and then. The problem we're having with the meat industry is we don't have the kill capacity because the workers keep getting sick. As an example, down in Texas on Saturday, of the 1,800 cases, 40% of them were in 2 counties. Those counties split Amarillo, where they have big packing plants. And it's a real problem. They're trying to figure it out. The USS Theodore Roosevelt, which is the aircraft carrier, had an outbreak. And so it's kind of a test of how well, we can handle it and how fast they can come back. And they're still having some challenges. I mean, there keeps being people that supposedly have gotten over COVID and then they retest positive again. Now, was that a mistake of the initial test that said they were okay? There are all these questions yet. Yesterday, we had a lot of optimism about 45 people in a test, 8 of which they tested to see about antibodies. I think you just have to trade these markets technically. There's lots of great swings and lots of opportunity. But in cattle, we're killing 30 to 50,000 head less than we need. That means that the next day or the next week you got to kill those. And the hogs, it's almost $100,000 head a week that gets backed up. So we've got lots of animals. We just don't have the ability to process them because we don't have the people. But that's my editorial for today. Because I know that everybody listening, goes to the grocery store or wants to buy stuff, and at least here in town, in Minneapolis, they're limiting. And the reason they're limiting is not because the farmers haven't produced; it's because we can't process.
Mm-hmm. Well, Rich, I remember 10 weeks ago, you and Lisa were in Las Vegas when it's just almost ready to get started. And I remember we were chatting early in the morning, and you said you were getting ready to check out early just to get out of town. I think you missed it by 2 days, didn't you, before they shut that place down? You were pretty lucky on that one. Yeah, that's good. Rich, I have a question about the virus here for just a second here, because, with the hospitals the way they are, yesterday, the hospital is pretty much empty. I mean, they're not doing any elective surgery, and so there's about, the bed capacity is way, way down, and the few patients here in Arizona, we've only had very few, cases of it because it gets so hot here, which is good for, staying away from the virus. But in some areas, it's really amazing. The death rates are so different between New York and New Jersey and some of these other places. I don't understand any. Do you have any feedback on why that's happening?
Well, in Minnesota, something like 73% of the cases, the people that have died have 2 other existing conditions. Like they have, besides age, for taking age out of the equation, they have diabetes or high blood pressure or some other condition. On the USS Theodore Roosevelt, there's 4,800 sailors. They had a lot of guys get sick. Only 1 died. But, that's a younger population. There seems to have been 2 strains of the virus, one that was in California that came directly from China, and the other one that in the East Coast that came from the Chinese that went to Milan to the fashion shows, and then it was brought back to the East Coast. That strain seems to be more virulent. Coronaviruses mutate all the time. The flu is an example of that, and that's why we have a hard time. Even though you get a flu shot, you may still get another kind of flu that they didn't have in the virus. This is a challenge. Hopefully we're up to meeting this challenge, the warp speed that President Trump has asked the vaccines to be developed. I mean, it's going to be interesting. But even then, if you think you're developing something, in order to really make it happen, you got to start producing it before you finished all your tests. And then if all of a sudden you have a hiccup in the test at the end, all the things you produced is just a waste. So it's taken lots of money.
Rich, this was before your time, but back when I was a kid, we were worried about polio, and then Jonas Salk came out with his thing for polio vaccine, and that saved so many people to death. I mean, just a picture of one of those lung machines just absolutely brought shivers to me when I was just a little kid, and I remember that was back in the 50s, and I just thank God they had something like that working. Just think back in the days of the Spanish flu and the bubonic plague, they didn't have anything. At least we've got good medical facilities now that are moving on. Rich, I have one question for one of our listeners, and that is if you had an opinion on how China is involved with this. I don't know any of the politics, but I don't know if you do either, but do you have a feeling on the political ramifications of this virus?
Well, it backs into soybeans as an example of, and of course the president has posted a letter to World Health Organization about how they dropped the ball. It seems there's two compelling cases. One is that it was man-made and somehow got accidentally released, and the other is that it was the natural thing. The first seems to have great credibility. In any case, it's kind of interesting that they allowed millions of people to fly to Europe and every place else, but didn't allow them to fly to Beijing out of Wuhan.
Yeah, that's for sure.
That's a little disturbing, but the bottom line is we need them to buy a bunch of our soybeans. Of course, they're buying lots of beans right now, but they're buying them primarily from Brazil. But at the beginning of the year, the Brazilian real was 245. Yesterday it got below 170. It's roughly 175 right now. So that's just a little less than a 30% discount. Well, that's a 30%. That's what's hurting our bean market. Now, there's some of the traders feel that the Chinese are encouraging their people to buy more beans and build up the stocks because they think there may be and will likely be a second wave of the virus coming to China. And that's the way viruses work. I mean, we'll maybe have a little reprieve this summer, and then we'll have a second wave in the fall and winter. But, you can't pound them too hard because we need them to buy our stuff, too. So it's a fine line.
Rich, I posted a chart up here for the folks here at TFNN on July soybeans, and it looks like we've got a really nice potential three-drive to a bottom down about another 35 cents. The 35 cents in the bean market is not too much anymore, is it?
No, that's a blink. I'm personally watching the November beans rather than the Julys.
Okay.
Because if we have a weather problem,
hey, Rich, we got to pay some bills here. We'll be right back with Rich Anderson, Anderson Capital Management.
Larry Pesavento is hosting a special event Thursday, May 21st from 9 a.m. until 4 p.m. Eastern Time. Trade What You See, a live trading event. For the first time in over 10 years, Larry will host a live event where you'll watch over his shoulder as he trades the markets live. You'll see how he organizes his trading day, the times most likely to generate a signal, what outside information he ignores, and more importantly, what he does not ignore, and much more. Larry will trade the markets in real time, including the Euro US dollar, pound dollar, dollar yen, the Dow, and E-mini S&P, crude oil, gold, treasury bonds, wheat, and soybeans, and more. When you sign up, you get a month of his daily newsletter, Fibonacci 24/7 included. For all the details on Larry Pesavento's live trading event on Thursday, May 21st, and to sign up today, visit the front page of TFNN.com.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks. We're talking with Rich Anderson. Rich, I posted a chart of the November beans, and boy, you're right. It certainly does have a much clearer pattern than the July. It looks like this bottom has already been made in the Novembers.
Yeah, I mean, it's nice. It's got everything you want. You know, it's got the divergence, the rejection of the new lows back on the 21st of April was outstanding. We're spending some time kind of making the time, equal to the left-hand side of that low. And we pop out, it's likely to be weather. And farmers will always tell you we're only 5 days away from a drought. And so far it's been perfect, by the way, unlike last year. Planning's gone great, et cetera. But that, and, maybe the Chinese feel the pressure, the pressure on point for the Chinese is they don't want their people to be unemployed. And so if we're too hard on tariffs to them, then they're going to have a lot of unemployed people over there. And if we're too adamant about moving some of our manufacturing back to the U.S., that's going to hurt the unemployment. So we have some bargaining power. But, there's always some middle ground that needs to be found. Mm-hmm. But Brazilian real, they're not stupid. They go to the best market. But that won't last forever either, and they've made a commitment. They need to keep it. So you just light a match with a little bit of weather, and you could see a pretty nice move there. It's everything you kind of look for. I might add that on the opposite side of the coin, the S&P, wasn't that like the third higher high yesterday, and the divergences and all that. I kind of got my eye on that one a little bit too, and the corn, we're just going to plant so many acres that even if we have weather problems, we'll get a pop, but they won't light a fire under it like they would the beans.
That's for sure. That protein is very important.
That's where my attention is. That's where my attention is.
Rich, we have a question. It's a personal one from one of our listeners, and that is, what precautions are you taking for your family up in Minnesota to fight this?
Well, I was buying. I was on the road, as you know. I was at January, and January 15th, I went and bought masks for everybody, gloves, plastic rubber gloves. So we had adequate supplies of that, and goggles, because the virus can also enter through the eyes. Now, I had to haul that stuff around for the next 8 weeks, which was kind of a putz. But now you can't buy some of that stuff. But we go for walks, but we haven't been to. I haven't been to a store since March 2nd.
Okay.
We get all our stuff delivered. Everything that goes into the refrigerator is washed, with soap. And anything that's not is quarantined in the garage for 4 days. And then we, after we wash stuff, then we wash our hands, take the gloves off, and dispose of them. I mean, we don't want to be one of those that takes up one of those beds. Let's let somebody else use those beds to get sick, and let's wait for therapies that are highly effective and for a vaccine. So I figure, we're buttoned down for at least 6 months and probably 12 to 18 months following this kind of a protocol. Younger people, it's a different story. But, that's what we're doing. Now, if you have type O blood, you seem to have a little bit more resistance to catching it. But nobody knows quite anything yet. They don't know how long, the virus can be effective on different surfaces. It's food that you order out. We don't order any food to be delivered because, how can you be guaranteed that that's safe unless you recook it yourself? So we're really buttoned down. Maybe we're overly precautious. Who knows?
Well,
but
you're doing the right thing, pal.
That's what we're doing.
Hey, listen, Rich, thanks for joining us, buddy, and we'll have you on again soon. Stay safe. Give Lisa my regards, and thank you again for, being on our show. We really love the information you give to us. So be safe out there.
All righty. Thank you. You too. Bye-bye.
Okay. All right, folks, I'm going to go through the gold market here for a little bit. I've posted so many charts over the past week or two about this gold market. I just wanted to give you a really quick bird's eye view of gold here over the last few months. Something has happened to the sound quality. I hope it's okay. You'll notice here, you'll see this is an hourly chart on gold. You can see the two ABCD patterns that are there, and hopefully we'll be able to see what happened. We broke now. We've gone from 17, this is the June gold, 1772 all the way down. We dropped $50 an ounce. So it's not too bad to expect a little bit of support coming in here. What we're looking at, of course, is a possible big change here, folks. I brought this to your attention on Friday to be looking for a potential top here in this gold market, and the reason why was if you look at the large specs, you see the large specs have been getting out of gold for the last month, and not only that, but look at the open interest, how the open interest has been dropping. That's not bullish, folks, and the reason for that is, you're talking about people that are exiting the market, and there's no new buyers. Now, if that's the case, Go back to last July of 2018 when gold was trading at $1,350. You see how the open interest started to drop into January? We went from $1,400 all the way down to $1,150. We dropped $250 an ounce, which was a 78% retracement with that drop in open interest. And then you can see open interest started to pick up. But this is a big deal that we've seen here. This is a potential big top in the gold market. So, all I'm looking at is the number of buyers and sellers coming in, folks. That's all I'm looking at. Nothing more, nothing less. So I think that's important to do that. What I look at is, where the buyers or sellers are coming. I look at the patterns. Where is it going to go? With given all the news that was out there this past week, you would think that gold would be at, $2,000 an ounce, but it hasn't got there. The silver, Mike, I really don't. It's a little bit different animal. I don't trade silver anymore. I mean, I look at it occasionally, but I don't trade it like I used to many years ago because there's just so many other things that are out there. But let me bring up this silver chart, and you'll be able to get an idea of what I'm talking about because it made all the objectives that we wanted to see because we did go substantially above these levels up here. You see, we got up to 1745 was our number, and we hit 1790. So we went 40 cents. But that's the emotionalism of silver, folks. It's only 1/6 of the open interest of the gold market. So it doesn't take as much as far as buying to make that thing move like that. So that's the main thing. Same thing in platinum. We went up to the 61% retracement in that, and we stopped dead in its tracks. So that also is something that I think is pretty important. This is what we were looking at as of Friday, and you can see here we did make that 872 in the platinum spot on. So that's what I'm paying attention to. So 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get the competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We backed off. We're off about 60 handles from the high we made at 95 in the S&P. So we're going to see if the very important number down there at that 29.25 level. We go below 29.25. That would be a little bit negative, I believe, especially if we close below that. But I believe we're going to be in a little bit of a choppy day, especially after the move we had yesterday in the stock market. Regarding my show that we're going to be doing, my all-day trading thing, it's probably going to be one of the last ones I do. This is a type of thing. I'll just give you an idea. This was from yesterday. You'll notice here Yeah, Rich is a great guest to have on. I met Rich when he was just a kid. He's not a kid anymore. He's retired. If you look at this, this is the British pound on a 4-hour chart. You can see that ABCD pattern that was there. And what you want to do is to, measure, the distance down between A and B equals to C and D. It's absolutely perfectly. And not only that, remember, this is a 4-hour chart, so you can see it gaps down on Sunday night and then holds there. And my gosh, that gives you a tremendous place, where you can trade this for like a 40 pip stop. That's less than around $200. And you can see here we rallied over 150 pips. And look what we did today. So far, we made the exact CD leg that we did the last time, the BC leg that we did the last time. Went to exactly the same price, 122 and change. So it's still in a downtrend. So, that's basically what we're looking at, is to try to find some of these patterns. And, we'll find a bunch of them. We're going to be looking at a lot of things. I'm going to throw in a couple of stocks tomorrow, or on Thursday, Microsoft and Apple, because they trade at good levels and they have great swings in them, being the two most active stocks for money-wise on the exchange. So we'll watch those patterns. I'm going to be looking at the foreign currency, especially the euro, the pound, and the yen, and we'll be trading the S&P 500 most probably. That's not one of my preferential trades, but crude oil and the gold certainly are, and treasury bonds. So we're going to be looking at all those. I can't trade all of them. What I'm going to do is I'm going to set up the days just like I usually do, showing the patterns that I want to look at. So we'll see. 877-927-6648.